We've had the first quarter being a pretty dismal one for the NSC, having reached new lows and placing it as one of the cheapest markets in frontier and Sub-Saharan Africa. What's your approach to the markets at this stage, where they're trading just above that 4,000 mark?
I think investors are starting to factor in the outlook on earnings, so basically 2011 and 2012 earnings. And so that's what's really causing a bit of selling in the market. So if you really want to buy into the market, you have to pick your stocks quite carefully. Otherwise, you might end up holding quite expensive stocks once earnings start coming in.
So let's take a look at where you're casting your eye specifically when it comes to those bargains that have opened themselves up.
Well, we have Kenyan. That's one of the stocks that we are looking at quite keenly. They're having their AGM at the close of this month, and that's a stock that we are really looking at quite keenly, especially in these times. It's sort of a defensive stock. Demand for oil is more or less inelastic, and Kenyan has a very good experience in working under price-controlled environments. So if you look at their subsidiaries in Rwanda, Zambia, Ethiopia hasn't been very successful, but they've also done very well on that market as well. So if you look at it and the exposure it gives you across Sub-Saharan Africa, trading at a decent dividend yield and a low PE, so it's a counter that we are looking at quite keenly.
What about a player like Safaricom? Because as I was saying earlier, we saw active participation from both foreign and local investors on that counter yesterday, but more of that buy demand coming through from the foreign component. What's your approach to a player like Safaricom? It's trading at the 4.10 shilling mark at this stage.
We still have a buy recommendation on it with a price of over 5 shillings. And so we still maintain our upbeat nature on the stock, especially over the longer term. And we still think the earnings might outperform our short-term expectations, especially with regards, I think most investors are quite concerned on the voice revenues. But when you look at the company, we are more inclined to think that financial services, particularly the M-Pesa services, are going to be quite supportive to overall profitability going forward. I mean, for the period ending March, we expect total revenues from M-Pesa to contribute about 15 to 20% of total revenues. And already the platform actually broke even towards the end of last year, contributing about 30 to 35% on the EBITDA level. So from that point of view, even though we're seeing voice revenues declining, we're still seeing the data and financial services really supporting the overall business. And in any case, we're also seeing minutes of use growing. Gross connections are also increasing, even though Safaricom is losing market share. So on overall, we remain optimistic on the counter.
Of course, we've had a new news headline adding further impetus to that argument you've just outlined, where Safaricom has won a contract for online cheque clearances. And basically, this is a contract to supply high-speed internet for cheque truncation system, making it one of the biggest deals now that Safaricom's signed with the corporate sector. How are you reading that new development?
I think you have to look all these developments as contributing towards one end. I think one transaction for Safaricom wouldn't make a big dent on the bottom line. So you have to look at a combination of transactions. So on data, we've seen that they're doing a lot in terms of broadband data. They're doing a lot with the corporates. The banking sector, they're also providing data facilities for a number of banks. So I think it's looking at a combination of factors, so that that is what is going to meaningfully impact their bottom line.
So as an individual news item, they're not really denting Safaricom's bottom line. The impact you see this having on a player like Access Kenya, which currently dominates that corporate data arena?
I think Safaricom is able to offer a very unique service on an overall case, especially for some of the clients. They're really able to offer a total solution. And I think from that point of view, smaller players like Access Kenya will face some challenge. They'll still be able to serve their niches, so probably the smaller corporates, and depending on the solutions they're able to offer. But obviously Safaricom will be looking at getting some of the high-end sort of transactions and still be able to to sort of focus. I think that their main focus would really be on the mass market, where they're able to do the same thing sort of, you know, millions of times. And so from that point of view, you'd be looking at that as an important factor, but not the main one.
Let's take a look at a player like Kenyan Airways. It was one of the most actively traded counters yesterday, and we had foreigners and local, both equally participative when it came to this counter. What's your expectations there? Because it seems the market is pretty optimistic ahead of its full year announcement.
Yeah, certainly. I think we've had a number of factors playing in on Kenyan Airways. We've had the announcement that they're going to raise capital. We estimate that between 200 and 300 million. I'm not sure exactly how they're going to do that. The price has actually come off quite significantly since they made the announcement. But nevertheless, we think the March earnings are going to be quite strong. I think we've also seen some downside, especially with oil prices rising significantly. But on overall, because most of their revenues are dollar denominated, we also think on the revenue side they're going to benefit, especially going forward. But obviously the cost side is also a concern, especially if demand starts coming off.